Welcome everybody to another quick hit review. It is Sunday evening. I am back at home. Eventually I have my 4 monitors instead of just a single laptop. Bliss, absolute heaven, so much easier. That's great, but on the other hand, I have very little to look at in terms of the market, to be honest with you. I've got 4 trades that I'm going to run through with you. Of course, when the market opens at 2200 hours GMT time, we may see some gaps. There are no trades that will be at market for me. I will simply do another review on Monday morning. I'll send out another quick hit review video if there's anything on the radar. But right now we have the euro yen, and as usual we're going to do our top down analysis. So here on the daily is getting a perspective of what has been going on. We've been talking about this for a while. We have this swing in the market, this directional move. We also have the market coiling. And I've spoken about this many times about how we validate the channel. If you're not too sure how to do that, it is within the educational video. Now my concern with this is that the angle of the channel is not very steep, although it is valid and we have had the 4 touches. My other concern is that we are down within the wicks here. So this is one really where if we do break to the downside, it would be one to wait for a pullback, look for a conservative entry and play for the usual 127 fib extension. If you are new, by the way, and we have had quite a lot of new people register recently onto the system, if this is going a little bit too fast for you, go through the educational material, it's all in there, and we do go over it as well within the webinars that we do and answer any questions that you have. So this is how I'm going to handle this situation. Let's just drop down the time frames though and take a look. 240, nothing. We had that cipher pattern last week where we said it would be a good place to buy just down here, and that rallied and hit targets. So nothing else on the euro yen. That's one that we're going to wait for. Let's go and take a look at the pound yen. We had on the pound yen, right, we have that potential 2618. So this was the painful trade. Okay, swing in the market, move lower, pull back, move lower, pull back, and then this was not a confirmed break below, close below this level, so we've not had a move lower. We are actually still within the wicks here, and so there could be buying pressure at any time within this point. But let's go down to the 240. So this was our big winning trade. Unfortunately, we didn't get as much out of it as we wanted. We wanted that 260 pips. 1, 2, 3, 4, and we never came down to hit targets, although the trade technically can still be valid, though we have struggled tremendously. These breakout patterns typically break out, see a retracement and break out to the downside. Well, we got the initial breakout around 200 pips. We saw another pullback, which was another breakout pattern. We broke out of that, did a deep retracement, made a new low, still did not violate structure, and I've done a major retracement back up into the wicks just up here. Now, if we do drop down to the 60, then we do have a double top which has been validated. So we had the RSI confirmation, and for me, we can take it from 70 for the RSI overbought. It had divergence, and we did speak about this last week. What I wanted to wait for was for this to be confirmed. So we have now had a valid break below, close below the low point, and we can now look for that 2618 trade. So you would be looking at selling the 61.8 fib. Stops going ATR above the high, so they're currently 15. It would get you at 136.20, so a nice area to get protective stops. Now, here is the question. Are we going to go down to hit those bigger targets down at the 127, considering we have really struggled to get the continuation? So this is 2 ways you can handle this trade. 1, play for a retest of the lows just down here for 64 pips and be out of the trade. 2, take a secondary position down here and take your targets for 118, or do both, or sorry, just go for the 118 pip trade. Either way, for me personally, I am going to take 2 targets here because we have failed, really struggled to get down to this 127. So my entry will be aggressive here at the 61.8. I'll be taking targets here, then I'll be moving to break even and holding for that secondary target. New Zealand dollar. New Zealand dollar had a, what did it have on it? I think it had an advanced pattern. Let's have a look. Yeah, so we're in consolidation here, guys. If we put a structure level on, we had this double test. Then what happened is the market broke to the upside. We then pulled back for a 26.18 trade. You can see we hit that 61.8 fib and moved higher. But what we have done is put in another double top up here. Now this double top has actually come into this fairly nice structure level just up here. So resistance, 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 resistance. So you've got 2 26.18 trades, one playing out now bullishly, the other one you could look at selling bearishly. To be honest, neither of which I am going to be interested in. Although in saying that, what we could see here is we have a fairly directional swing in the market, a fairly directional pole, and we could be seeing a channel form. Now if we do see this, in fact it's not going to be valid on the 240, maybe on the 60. I don't think we're going to get it to fit on the 60 either. And if you don't know how to draw these out, again, it's all within the educational material. So this isn't going to be valid. This would be the first touch, this would be the second, third, fourth, and then the fifth would take us way past the highlighted price reversal zone. So the only thing I was really looking at then here is we have a cipher pattern. So we have X to A to B, B to C, CD completion at the 786. We did not hit targets. Now for me personally, the cipher is on the 240, and what I'm going to be doing is highlighting the wicks just like this. And as per the rules for the rotation patterns, we're allowed to drop one time frame lower and look for that rotation pattern within that highlighted area, within that price reversal zone. Now I actually like this formation. This is a sign that we're running out of bullish pressure. We do have then a channel that is forming, and this is the fifth touch up here. So there are a couple of ways to handle this, because you guys know by now that we don't just trade advanced patterns aggressively, we now wait for extra confirmation. So let's just bring on what the target will be down at the 382. So we know that if we come higher to this area here, we can look for a double top or a head and shoulders, but this channel right here, it could be a good place to get involved with a short, because if you remember the training, guys, channels, we do form lots and lots of rotation patterns, and so within this channel we could see a reversal. And what I absolutely love about this is if we put a structure level on just here, we have the 6700 psychological number, and if we look left, we have a very small amount of resistance there. Let's just keep looking left, see if there's anything else. We have this beautiful test right here that we got a rejection from. Let's just look a little bit further left. We have a zone here, nothing major, but it is, oh, right here, look at this, beautiful, right here, a lovely big reaction. So this is going to be quite a nice area to look for a shorting opportunity. Because this channel is also on the 60, we are allowed to drop one time frame lower, and we can look for a double top within the channel. Now we already have the RSI confirmation. We went overbought here with divergence, so a double top here coming back up for the retest, holding this channel. Personally, I would have my stop behind the 6700 psychological number, maybe at 6710s, maybe even 6715s, purely because this could also turn into a head and shoulders where we rally up to here, see a pullback, something like this, giving us a head and shoulders. So we'll wait and see how the market opens, if there's any gaps, and this will probably be a trade I get involved with on Monday morning. We'll wait and see how price reacts. The only other thing I had on the radar, if we go to the dollar CAD, cannot spell, dollar CAD daily, we are looking bearish. Ever since we sold the market up here, this thing has been really just nosediving. If we put a structure level on at our lowest point, you can see, and I'm going to zoom in, that we had a move lower, a pullback, and another move lower. So this right here is another break below, close below, putting us in trend. Strong sign here that we're going to go lower. Where could we come lower to? As a minimum this level, but realistically this level right here. If we do drop down the time frames and look for some form of entry or some form of pattern, I really don't have anything. You could look at this. So we had a move lower, a pullback, a move lower, a pullback. Now right here we have had a move lower, so technically this is the entire outside return. However, we have this lovely level of internal structure right here. So within this zone, I'd look for a conservative entry, look at shorting the market, and I would look for that first structure level for first targets at least, which were, I'm going to have to go out to the dailies for them, which were here. No, they weren't. They were here as an absolute minimum, and secondary targets down here. So if you can get an entry here, we're looking at around a good 100 pips there of potential reward. That's all I have on the radar, guys. Obviously it is Sunday when the market opens, and we start to see buyers and sellers entering the market, then we will actually see a bit of movement, but that's it for the time being.